This is Brad Wolf, and this is the full end of day Emini review for September the 7th, 2022. So first, let me talk about the daily chart. So on the daily chart, I've mentioned a time or two that the market was probably going to try and bottom around July the 8th and June the 28th. These were two breakout points, and it was logical for the market. It retested here and bounced on July the 26th. It was logical for it to retest down here and bounce again. The market broke below the 50% pullback from this low to this high. There we go. So some traders would buy here and scale in lower, betting that the market would get back to the 50% pullback of this rally. 4,000, big round number, is another magnet, so traders would buy. Some would scalp out here, others would buy and buy more lower, betting that we get back to the 4,000 round number. So overall, daily chart's probably going to go sideways somewhere around this green line, which is 4,000, and somewhere around this double bottom from September the 1st. But most likely sideways. What do I think is going to happen tomorrow? Well, I think disappointment. Bulls have a really big bull bar, but a weak sell signal bar. Some traders will sell this high and scale in higher. Second entry buy, so not a great sell. I think the Bulls are going to find, the Bulls have a great bar here. They're probably going to get disappointed here shortly. So probably tomorrow. This is strong enough, though, that Bulls will probably try and buy somewhere down here. So if you're a bear and you sold this high and scaled it higher, you're probably going to be disappointed, which means you're probably going to try and buy back shorts here. The Bulls are going to try to buy there as well. Less likely on the open tomorrow we gap up and rally far, or we go straight up. More likely sideways. Weekly chart. Bulls trying to form a double bottom down here, but again, the problem on the weekly chart is that after this many bars down, probably a small second leg down is likely. So we'll have to see. There's still 2 trading days left this week. 60-minute chart. I don't know why it does that. 60-minute chart. Hang with me. Let's try that. There we go. 60-minute chart. We are testing this major lower high here. Strong enough breakout, probably always in long, but the Bulls really need to get up here. And we're testing the high of this bar over here. 2 legs up, leg 1, pull back, leg 2. You can call it a wedge. 1, 2, 3. 3 consecutive bull bars. First reversal down probably will fail. So probably going a little bit higher, but again, at resistance. We're breaking above the moving average, which is good. So the question here is, are we going to pull back or go up? Now, this is 3 pushes up, so the Bears may get a few legs sideways to down, and we may test somewhere down here. Let's go to a 5-minute chart. So here's today's price action. So trend from the open, here's bar 1, rallied, consecutive bull bars, and really, it was a trend from the open that lasted most of the day. Lots of trading range price action, and it's pretty common when you get a trend from the open. Or in other words, it's common to have trends. Let me back up here. It's common to have trends that look like a leg in a trading range that develop into a trend. So at the end of the day, you print out the chart, and let me do a 5-minute chart. Well, this works. At the end of the day, you print out the chart and you look at this and you say, well, of course, clearly it was a bull trend day. Market rallied, pulled back. Just getting rid of some of these lines for a moment. There we go. Market rallied, and it was a trend ever since the bar 53 low yesterday. But it's not that clear. I mean, just look at this. Is this a bull trend or a trading range? Clearly it's a trading range, but you have higher low here, you have a higher low here, higher low here, higher low here, higher low here. So this might be the early stages of a bull trend. It became important over here. Arguably, the market started to form a gap with the 35 low and this area over here. So this was somewhat of a negative gap, and then the bulls got another negative gap here. When you start to get one or two negative gaps in a leg that looks like a trading range, it's really important to be aware of that because it might be developing into a bull trend. So you have to always be wondering, what's the target for the bulls? Is it here? Well, we're already there. Maybe it's here. Let me kind of do it like this because that's more realistic. Maybe it's here. So that could be one target. Another target could be this low to these highs up here, which is 50% pullback. No surprise, this low, which was reasonable, to this breakout point takes you up to the 50% pullback of the August rally. And if I didn't mention that earlier, it's this, the low of here, high of here. That's exactly 50%. So the bulls broke strongly to the upside. Buy climax, pulled back, testing the breakout point here, went below it. And the bulls had a two-legged pullback that formed a double bottom. Low probability, but it went straight up, testing these highs, and actually formed we got a bull breakout of this neckline. So double bottom, 54 and 58. Got a bull breakout above the 56 high and tried to get a measure move up. Micro channel here, broke to the upside. So let me just kind of back up and go from bar one. First bar of the day, it's within tight trading range and called a triangle. One, here, this low, and this low. Strong bull breakout bar, probably a give up bar for the bears, and a second leg up likely. Open of the month, open of the week, two targets. So the market may have to get up there. Reasonable buy the close, probably going up for a second leg. Follow through, but why the big tail? Closed above the prior bar, so that's good. So you're getting trending closes. Close above this high, close above this high, close above this high. And let's see what else. And low above this low, low above this low. You get it. It's forming measuring gaps. So here's a micro gap here, probably going higher. But why this big tail? Increases the odds that the market may pull back first before it gets a second leg. Doji, another disappointment bar. Bulls may start trying to buy pullbacks instead of trying to buy closes. So they may be more interested in buying somewhere down here at this breakout point, maybe down here at the 76 high. Big bear bar. Bulls trying to buy a pullback. They bought the high of this bar. They're trying to buy this gap here. They're also trying to buy 50% of this bull bar here. And it's also a 50% pullback of this low to this high. This is probably enough damage to the bull case that the market may go sideways here. Typically, you don't want the pullback to go below several bull bars. And what happened here? Bulls bought this close, scaled in lower. Other bulls just bought lower, disappointed, trying to get out break even up here. Bulls bought the 4 low, scaled in, disappointed, and the market was met with sellers. If you're a bear and you know the bulls bought this low and scaled in, you're going to sell up here. You're going to sell to go short for a scalp. Consecutive bear bars still always in long, testing this gap here. The bulls still have not closed this gap, so it's still open. And big bear bar, big bull bar, tried to go outside up. It's a big bar, big risk. This gap's still open, so that's good for the bulls. Enough disappointment though. Bears who even sold this close and scaled in higher were able to make money. So bar 7 is probably, while it's good for the bulls, the risk is big, so the market's probably going sideways. And you can see bar 8 triggered above bar 7, but again, not that exciting if you're a bull. It's still a limit order market. We went sideways here, going sideways here. Big bear bar on bar 9, closing below all of these highs here and closing the gap. Might be a give up bar, and the bears, they want 2 legs up from 51, so leg 1 pull back to 78. leg 2 to bar 4. Is it always in short yet? Probably not. The bears still have not done enough, and if the bears, to say that another way, the bears need more, and if the bears need more, the bulls will buy the close, betting that the bears are not going to get more. And now we have a wedge. 1, so bar 5, bar 7, bar 10. Bulls will buy above it. Bears maybe stop down here. The bears see a wedge, and they want a bear breakout below the wedge, so they want a bear breakout below bar 10. Bad follow through on 10. So some traders, they bought above 10. They'll buy more lower, looking to get out somewhere over here. Other bulls trying to buy 50% pullback from the 10 low to the 11 high, which is what happened here. Outside up bar, probably big enough surprise that the market's going higher and at least going to have a second leg. Bears, they want a failed breakout above the 12 high and a bear bar closing on its low, which would be a second entry short, leg 1, leg 2, and a double top here. But this bar is pretty good. The bulls, they're getting a lot of bull bars closing on their highs here, close at the midpoint, but still a bull bar. Close here, which increases the odds slightly that we're going to get an upside breakout. The bulls still want a second leg up, leg 1, pull back, leg 2. And let me get rid of this. So a couple targets, trading range. Bulls want to measure move. They want to measure move of this range. Follow through, but close below the middle of the day. It's a wedge. Close below the midpoint of the bar. Wedge 1, 2, 3. 1, 2, 3. Testing the open of the week. The low of bar 29 and bar 30. Well, the low of bar 30 yesterday. Some traders will sell at the open of the week, betting on profit taking, especially since the market formed a wedge. 1, 2, 3. This is a strong enough breakout that the market may have to get 3 pushes. 1, pull back, 2, pull back, 3. This was enough damage by this rally that there's probably going to be sellers up here. Again, look at this sell-off. This sell-off is so much stronger than this sell-off. There wasn't even, these pullbacks could not even go above bear bar. Pullback went above one bull bar, one bear bar, but it's still an inside bar. Couldn't even get consecutive closes, so we couldn't even get a bull close above a prior bull close. Here, we got a bear close below the bar, another bear close below the bar, much more damaging. So, whoops, wrong area. Bear close, still kind of the same thing. The bears got a big bear bar, but they couldn't get a bear close below it, so damages the bear case. But they got more closes down here. So, bear inside bar, 3 pushes, 1, 2, 3. Might be more buyers below. It's low 2, 2 legs up. Low 1, pull back, low 2. Strong enough bull bars may get a second leg up. The bulls want to break out above the wedge. Right now, they have a measuring gap here. They want to defend the gap and the markets go higher. 3 consecutive bear bars. Some bulls disappointed. They bought the close, didn't go higher. They're getting out break even. Other bulls trying to buy 50% pullback from this low to this high or this low to this high. Testing up, but second entry short, 2 legs up, leg 1, pull back, leg 2, a lower high. Traders see a wedge, 1, 2, 3. They expect 2 legs down, and they hope that bar 17 is the lower high. Outside up, enough of a surprise, probably going a little bit higher. For the bears, they want another wedge, this being the first, this being the second, this being the third. Testing the 32 high over here, just a little bit higher, so the bears are hopeful that that the next bar is a bear inside bar, closing on its low. And it wasn't. The bulls got followed through, so the bulls are breaking above a wedge, 1, 2, 3, or 1, 2, 3. And they want to prevent a bear bar here. And there you go. So this is the give up. So 3 consecutive bull bars. Might be exhaustion, but probably strong enough for a second leg up. Bear inside bar. Some bulls bought this close, disappointed, trying to get out break even. And second entry short, so bulls bought, disappointed, used this bounce to get out break even. Now we have a second entry short, but it's really part of the same micro channel, so it's really a low one short and probably buyers somewhere below. A lot of bulls might be more interested in buying down here at the 13 high, which is this breakout point, which is what happened here. And you can see some traders on 25, they tried to buy the high of this breakout point, bar 13. They bought a couple ticks above it. It couldn't get down to it, and then the market turned up for a scalp. And then we got another big bear bar that actually closed. Let me see, did it close 36.5, 36.75? It did not. It actually stayed open by one tick and bounced up again. So traders are defending this gap, the 13 high and the 27 low. It's a wedge, 22, 25, 27, probably going up for two legs. And there's the first push. The bears, they see a double top, lower high on, let me try and do this. That might make it a little easier to read these bars. Where were we? There we go. Yeah, so 30, they see lower high double top. Some bears will sell below. But again, holding above the moving average, starting to form gaps. Probably going to go more sideways. The bears, they failed to trigger it. So again, probably going sideways. Triangle, 1, 2, 3. Tried to break below the wedge, failed. Bull bar. It's the doji forcing you to buy at the top of the trading range. Might be more sellers above. And bears sold high of the bar. Consecutive bear bars trying to close the gap with the 13 high. Good for the bears, but the bears really need more. Another bear bar, but you have to wonder why the bar could not close on its low. And it may just be a vacuum test of the open of the month, open of the week. And these highs over here. Traders may have been more willing to sell had this bar closed on its low. Some traders will sell the high, but they'll be quick to exit for the fear of a second leg trap. Leg 1, pull back. Leg 2. Bull bar closing on its high. Bears 35 that sold the close, disappointed on 36. They'll use 36 to close. They'll use 36 to scale in higher and try to get out break even at the 37 close. And there you go. Bears sold the close 35, disappointed 36. They used 37 to get out back at the 35 close. And give up bar, so two legs down. It's basically micro double bottom, down, up. Well, down, up. So some bulls will buy above, stop down here, betting on the upside breakout and this gap staying open. 38, good for the bulls. Let's see the follow through. 39, great for the bulls, probably going higher. But again, 30, every breakout we've had today has gone sideways. Bar 1 and 2, sideways for 8 bars. 12 and 13, sideways for 6, 7 bars. The breakout on 21 and 22 went sideways for 10 or 12 bars. So what do you think is going to happen here on 38, 39? It's a breakout. It's a surprise. It's probably going higher. But you have to, but more likely, there's going to be disappointment. So sure, you can buy the close, but after a 5-bar bull micro channel, more traders may be more interested in buying the 21 high or the 30 high. In other words, buying the breakout point. You have to wonder why 39 has such a big tail on top. 40, bad follow through, but again, 5-bar micro channel, 6-bar micro channel, probably buyers below and scaling in lower and probably going at least a little bit higher. 42, testing the 30 high and the 21 high. And bulls, they bought the 39 close, scaled in lower on 40 or 41, 42, disappointed, trying to get out back at the 39 close. Some traders bought the 39 close, disappointed by the follow through on 40, used limit orders to get back out at the 41 close, or excuse me, the 41 high. So they bought here, disappointed here, and they got out at the high close here. So the high close was 51.5, the high of the bar was 52 even, so it gave them 2 ticks room to get out. 43, follow through. It's a breakout to the upside of, it's the entry bar for the 42 high 1 buy. It's a breakout above the 39 high. Might be more sellers above, but again, you're in a bull trend, it's always in long. However, lots of buy climaxes. Buy climax, pullback, buy climax, pullback, buy climax, pullback, buy climax, a little bit of a pullback. Probably going to fill this gap here at the 42 low, 30 high, and 21 high, and not go much higher. This still looks like a leg in a trading range, but you do have to wonder, there's a clear open gap here, and arguably an open gap here. So the close of this bar to the close of this bar creates a negative gap. Weak follow through, it's a second entry short, second failed breakout of the 21 high, but again, 44 is a bad signal bar, 40 is another bad signal bar for the bears, so probably going more sideways. 43 might be strong enough for a small second leg up. Some traders will buy the 43 close, and disappointed on 44, they'll use 45, 46, and 47 to try and get out, break even, which is what's going on right on those 3 bars. 48, another bar, so down, up. Let me start over. Low 1, pull back, maybe low 2, pull back, low 3. It's an implied wedge, 1, 2, 3. But again, tight trading range, we're testing the 42 high. May have to get down to the 42 low and close this gap over here. So some traders, while they will buy, they may want to buy lower. And the bulls, they bought. It got close enough to the moving average, they decided to buy. So 50, a bull bar closing above the 44 high. It's also a wedge, 3 pushes up from the 39 high, 1, 2, 3. So might be more sellers up here, but again, possible measuring gap, 42 low, 21 high, 35 low, and the 13 high. Well, let me state that a different way. Let me do it like this. This will be easier to see. So here is a line chart, and this is the 5 minute, and this is the 5 minute chart of what we're looking at. So as you can see, let's do it like this. Here's a gap. So here's a gap, here's a gap. And the reason why you pay attention to negative gaps is if you don't get if this price does not close below the highs over here, the gap stays open on a line chart. And since a lot of institutions trade line charts, that means these gaps are open. So this close at 11:55 Central Time did not close above the 10:25 Central Time area. So these gaps open. So let's find 11:55 on the regular 5 minute chart. Let me just change this back. Okay, so here is 11:55 area. And you can see this is the low close. And this is the high close here. So there's obviously a negative gap here. Here is the high close at 9:55. That is 31.75 right here. Here's the low close at 11.25, 33.50. So there's a little bit of a point gap here as well as here. Therefore, that increased the risk that this is going to form a small pullback bull trend. And we're not in a leg in a trading range, in that we're in a leg in a trend. So let's get back to where we were. Yeah, there we go. Consecutive bull bars. This gap open here, still always in long. Bull bar closing on its high, wedge, 1, 2, 3. Bulls will buy above this bar. You can buy here, but again, if you're buying, you're betting on the upside breakout. Otherwise, you're at the top of the channel. Here, here, here. 3 pushes, 1, 2, 3, or 1, 2, 3. Strong breakout, so you may get a measured move of this range here. So kind of something like that. And the reason for that is this should have been a wedge. 1, 2, 3. The bulls failed, so you have to think about a measured move target, which got filled right there. So it's still by the close, 51, but again, best looking bull bar of this late in this rally, so may go more sideways. Traders might be better off looking to buy a pullback, but if you wait to buy the pullback, you risk missing a vacuum test up. Follow through, 4 consecutive bull bars, 5 bar micro channel. First reversal down should fail, so traders will buy it, pullback, and they didn't get it. So if you try and buy the pullback, this is what you risk. You risk a sharp move. This right here is exhaustion. So if you're buying here, just think about it. If you're long, what are you going to do when you see this bar? You're long, it's late in the move, you don't think it's going to go that far, and then you go, wow, what a strong buy vacuum. What a gift. I'm going to take my profit. Which is why you will have bulls selling and aggressive bears selling, betting on a pullback. Maybe 50% of this bar, maybe down here, which is what happened right there. So some traders sold this high scaled in, they're trying to get out, and the market went outside down. This was by the close, but it was a bad by the close bar, but we may get back to it. This is a tight enough channel. Some bulls buy, they buy more below the bar, stop really wide, and the market tests back up to the 55 close, which it did right there. 3 consecutive bull bars, bar 61. Probably the first reversal down will fail. I still think the market's going to get back down to this low here. Some traders sold below it, but again, after this, you may get a second leg up. And we may have to get to the 50% pullback of the rally. Micro channel, 62, 63. First reversal down should fail, 64. And then we trended up. We got to the 50% pullback of this rally here. Kept going higher. And I'm going to kind of zoom up, run out of time. And you can see we really went sideways into the close. So for the end of the day, around 68, one of the things to think about is when you're in a rally that has lasted arguably all day, and you have a strong buy the close rally here, that gets a strong breakout here, that's exhaustion, pulls back, and then you get buy the close here. The issue you face is time of day. So by this point over here, 1405, 1410, this is a pretty extended channel. And you can see here, the bulls broke above the top of this channel here. So we had a spike to 61, channel to 68, broke above the channel line on 68, went up for a second leg and tested the bottom of the channel. Channels typically evolve into trading ranges. And if it's already at bar 7 or 70, that's pretty late in the day. Therefore, the market's probably going to go sideways into the close. So a lot of traders, once you see, if you were long and you see bar 68, it's probably better to just take your profits. You're at an obvious point of resistance, 50% pullback of the rally. Now, as far as selling, the issue the bears have is this channel up so tight that it's really hard to make the math work. If you're selling 70 close, stop above, that doesn't make a lot of sense. And that's why if you sell the 72 close, you can do it for a scalp. But again, where's your stop? Up here? And then what's your target? Maybe the 70 low, 71 low. It's really difficult to make the math work. So overall, the market was always in long by the close of 2 or 3. Didn't clearly become always in short, but when you're in a trading range, a lot of traders don't want to risk this much because it might be a second leg trap, leg 1, pullback, leg 2. They'd rather buy a pullback. This is still pretty much a limit order market. And it's always in long here, but you get a deep pullback. The market tried to become always in short, couldn't quite get there. So if you were long over here, buy this close, and unfortunately, I think the bears need one more bar here. So if you didn't get out early, you stay short, stop below here. No reason to get out. Maybe if you get out here, do you buy again there? Maybe, but not ideal. Some traders get out below bar 30, trading always in, but they have to buy again, maybe on bar 37. It was a retest of the 35 close. Back to always in long, no reason to get out. Some traders get out below 56, but if they did, they have to get long above 59 or 60, and they hold long until the end of the day. So what about stop entries? Bar 1's okay, 2's okay. 10 is a reasonable stop entry. It was a triangle. So 1, 2, 3, 1, 2, 3. Reasonable buy. And then other than that, you can buy above 12, but you have to know what to do if bar 13 closes on its low. You can buy the 37 high, probably stop down there. But again, not ideal after 3 consecutive bear bars. And this was pretty difficult to buy as well. High 1 buy, strong enough breakout for a second leg. You can buy that, but again, a little bit tricky. And traders will buy above, buy above, buy above. And over here, I would leave most of this alone. That's pretty difficult to manage. For buy the close at bar 2, maybe bar 3, and buy the close on bar 12, but pretty aggressive. And then probably buy the close on 20 and 21, but becoming parabolic and exhaustive. 3 pushes up, 1, 2, 3. Buy the close 38, 39. I don't know, 42. I wouldn't. Buy the close 50, 51, 52, 53. 55 is probably more sell the close, but you have to know how to manage the trade, and you probably need to be able to scale in higher if you sell the 55 close. So most traders should not do that. And then probably buy the close 60, 61, 62, but starting to go sideways up here, most traders should scalp out. And that was it for the day. Limit orders. First limit order of the day, probably buying the 4 low, scaling in lower, or buying 5 points below the 4 low. Traders, some will buy the 8 low, but again, not ideal. And then other traders, they may buy the 7 low. And then traders will buy the 14 low, scalp out. They can buy the 22 low. They can buy several points below the 22 low, like at 13 high. And I know I missed a few up here. Some traders will sell the 16 high, scaling higher, which is what happened here. Other traders, well, that probably works for now. And again, micro channels, some traders sell the 28 high, scaling higher, which happened over here. What about selling the 36 high? I would not. It's a bull bar closing on its high. Some traders will sell the 35 high, but again, I think the bears needed more there, so I'd rather look to buy down there. Traders can buy the 40 low and scaling lower, scalp out. And do they buy the 56 low? I would not. I think we're going to the 53 low, so it's reasonable to buy the 53 low. And what about selling the 59 high? I would not. It's a high 2 buy in a trend, so might be more buyers above. It's okay to sell the 57 high 1 buy after buy climax, so might be probably more sellers above, but you need a wide stop. And then traders can buy the 54 low, and that's probably it for limit orders. Well, let me talk about tomorrow real quick. Tomorrow, I think that we're going to see disappointment. The bulls, they've got a great looking bar, which is, makes traders hopeful. But I think the reality is maybe we rally up to 4,000 and then we sell off and we close I think we're gonna do something disappointing for the Bulls and confusing for the Bears, because I'm thinking trading range, but strong enough breakout. I'm thinking that the market will have a second leg, but I don't necessarily want to buy the close. So that makes me think it'll be confusing. Thank you for watching this video.